Hi everyone, this is one of our webinar that we actually did last week. Okay, so in last week we actually talked about this Asia high yield bond funds. Okay, what is it interesting and which are the type of the bond funds we are looking at, and why is it important for you to know about this bond fund as a diversification of your portfolio. Okay, so today we have Darren. Hi, Darren.
Hi, everyone.
Okay. Yeah. Okay, so Darren, can you just share with us what is this Asia high yield bond fund, and as a beginner, how can they actually get started with this, or experienced trader, are they suitable for this Asia high yield bond fund?
Okay, Asia high yield bond fund actually. Okay, let me just go to the basic. For bond, right, there actually, for investor want to buy bond, retail bond, we get limited retail bond. So they need to buy corporate bond. We need a minimum of 250,000, maybe out of reach for a lot of investors. So that's why there's something called bond fund. We require only a minimum of $1,000, and some even only require you to can invest at $100 per month. Okay, but bond there's category called investment grade and high yield. Okay, anything that's BBB and above are called investment grade bond. So anything below that are called high yield. Okay, high yield is a very good, nice word, but in our word of high yield is called junk bond. Okay, so take note of. So what does that mean? It also means that the risk is definitely higher in that aspect. So a lot of people thought that US high yield is good, but take note, US high yield in general about the default rate close to about 5%. Actually, Asia high yield, the default rate is much lower in that aspect. So when you buy a bond, you worry of default. That's why a high yield bond fund can help to diversify your risk.
Okay, so a high yield bond fund, typically what are the returns and what is the volatility and things like that? How can we see all this?
Okay, typically a high yield bond fund, the dividend payout is about 7%. Maybe I just show you how we filter high yield bond fund. Okay, using our own tools. Let me just show you what is all this. Okay, we go into high yield category.
Okay, for your this list, how many funds are there inside this?
This list is more than 1,000.
More than 1,000 funds.
Yeah, more than 1,000 retail fund is there.
All this is listed in Philip.
Yes, all these funds are listed on Poem's website that you can buy on your own, and also different currencies. So we'll make it simple. We zoom in down to the categories. It's a bond category, it's a high yield, and it's on the Asia Pac. Okay, and we only look at Sing dollar denominated fund. Okay, so by looking at that, you can see there's actually 4 fund house have Asia high yield in Sing dollar. One is called the Alliance, and one is the East Spring, and one is the Fidelity, and one is the UOB. So practically there's 4 funds. Okay, all these 4 funds pay a dividend yield about 7 to 7.5% per year, and all pay dividend on a monthly basis.
Is all this dividend yield fixed, or is it variable, depending on the market?
The dividend yield is based on NAV. So they peg it to, like for example, UOB is 7% of NAV. That means at current price, the NAV is 7%. So depend on the price you buy. So when the price move up, of course your dividend will increase. When the price come down, your dividend is drop. So it's always pegged. Okay, for East Spring, they have increased their dividend payout to 7.5% in the aspect. Okay, but take note, dividend payout, getting dividend pay doesn't mean you got capital gain.
Okay.
So positive distribution doesn't equal to total positive return. So there's a lot of investors not aware of it. They thought that getting dividends, they also make money on the capital gain side. So that's something you need to take note of that. So let's zoom in further that how we filter high yield bond. Okay, of course, these are 1 month performance, 3 months. We want to look further, 1 month. So you look at 1 year. This is July data. So you look at 1 year, the performance returns. You can see that East Spring give about 10% return.
Wow.
Take note, this returns is inclusive of dividends.
Oh, inclusive of dividends. So is this 1 year period, right? This the data of the returns, right? Do we see it in the Poems or?
Yeah, you can see on Poems also by itself. But Poems you need to go in on the individual fund because for here I can do a filter. So this is, you can see this is the real. For example, you look at Ireland, it's 6% or 6.5% 1 year return.
This is inclusive of the dividend.
Yes. So if you get a 7% dividend, actually you got a loss of 0.5% capital. So that's something you need to take note. So a lot of people see here positive, then they thought it's positive return. And of course, there's something called standard deviation. Why we like high yield bond fund? Because of higher dividend and the risk actually is not that high compared to equity. You can see this is a standard deviation. The fluctuation is range from 3% to 6%. So that's a standard deviation volatility. Compared to a REIT, the volatility is 10 to 13. Compared to stocks, it's more than 20.
Okay, so basically the price movement is between up 5% to down 5% usually.
Usually that's how you look at. Then this is the maximum drawdown. You can see 1 year what's the maximum loss. It can come down about 4%. And of course you got a higher loss on the other aspect. So this is something you need to take note. Okay. And next, but we look longer, this is a 3-year return. Because 1 year sometimes come tell. You can see 3-year returns, no bond fund has achieved more than 7% return. So what does that mean? All will have some capital losses. Because I think last year, all the bonds are not performing well because due to the interest rate issue. Okay. But we look at longer term. You see, when you buy this type of fund, you're looking at longer term. You want to hold long term. We look at 5 years. Then 5 years, you can see that there's one bond fund stand out more than 7%.
Oh, okay. This is
UOB Asia High Yield. So what does that mean? That means you got a 7% dividend, but you still have the capital there to preserve. And so that's how we look at it. And look at all the volatility is about 4 to 5%. Okay. So if you are looking for Asia High Yield to substitute your portfolio for dividend income, then you may want to consider that as part of your portfolio. Don't put all your money in one fund. It's just a diversification, because this one is able to give you high yield, but the capital appreciation may not be there.
Okay. Unless we buy when it dropped 4 to 5%, then there'll be more capital.
Then it'll be I buy at low price, then of course definitely you don't worry about the market already. But for this fund, my investment experience is if you do a regular investment on a monthly basis, over a period of time, and you reinvest a dividend, you see after about 2 to 3 years, actually it's quite stable already. Because your average price has come down.
I see.
So the market swing, because the volatility is not that high. So when the market swing itself, you are actually quite stable and positive.
So when you get this regular saving plan for this unit trust, right? When market goes down, you actually buy more units. Am I right?
Yeah, you're buying more units, and at the same time you reinvest your dividend. Actually, you reinvest also more units. So we will actually recommend people to buy this on a regular savings plan and start to reinvest first during the initial first few years, to make your price actually come down and your units get more. Then after that, you can choose to take payout.
Okay, why is it so? Why initially we put the reinvest and later on we choose payout? What's the?
Okay, unless you are already retired and you need a dividend immediately, most people may not the dividend immediately, so they reinvest the dividend so that you can compound your returns. You can compound the return and you bring your average cost down. So we have many clients that do it for a few years. Then you can see that regardless of how market move, their portfolio is always in the positive aspect. Not very high gain at time, but at least then after they can convert to dividend payout, then they just get a normal dividend for cash flow.
I see. So we become a passive income. Of around 5% to 7% passive income.
Yes, correct. Actually, you can get 5 to 7% over the long period of time.
But let me ask, if let's say this thing, like let's say initially I invest, then after that I after a long period of time, like maybe 3 years, 5 years, right? Will my return on the yield become more, or this is more like a constant?
Okay, your return of the yield will become more because it's 7% based on your NAV. So if you compound it over a few years, actually your NAV price have actually dropped. But the 7% based on the current NAV. Okay. So your return actually gets more. We have to do a back testing over a long period of time. Actually, your yield actually become more than 7% over the longer term, especially when you've been to one market cycle.
I see. So basically is this suitable for beginners to have this?
For beginners, we always recommend a diversified portfolio. They can actually allocate, because the initial capital investment can be as low. For UOB funds, you can just start with as low as $100. So even a minimum of 1,000 to start.
I see. But for those high net worth people, are they suitable as well?
Okay, for high net worth people, if they buy a corporate bond 250,000, their risk actually is quite high. So actually they spread over a high yield bond, they also get a high yield, but actually they are spread over a basket of 50 to 60 company, or sometimes even more than 100 company. Actually their diversification risk is better. And of this, take note, high yield bond fund, there's also something called default. Of all these fund houses, 4 of them, actually there's 1 or 2 actually have suffer bond default.
Okay, so one
I don't want to mention name during this session. Okay, and some of them don't have bond default track record. That means the fund they buy didn't default at all for how many years. This shows how prudent they are in selecting the company also.
That means the fund managers is really good. So for high net worth people who are actually looking at this UOB high yield Asian bond, it's actually a part of a diversification of their portfolio. Let's say they have like a $1 million, they buy like 3 companies, corporate bonds, and 250,000 they buy Asian high yield. Basically, they are having like a portfolio of diversified.
That's why 60 to 80 company straight away already.
I see.
Yeah.
And most importantly, the returns and the fluctuation of this, what we call the
volatility. Volatility is within a 4 to 6% range.
Okay, one thing to actually add on to Darren's is actually when you invest in this, even if you are high net worth, you can actually buy and sell by parts. You do not have to be in a lot size of 250,000. So as example, for some people, they have a bond expire, and then what they do is they can actually buy this one first, and then when they see a better bond, then they can actually switch out to buy the individual corporate bond as well. Am I right to say that? Yeah.
Yes, correct.
Or maybe if they see a good stock, to pick, they can sell half or take some of the capital out. So it's very what we call flexible.
They can liquid anytime and guarantee can be sold.
Okay, because there's a manager managed by a fund manager, right?
Yeah.
Okay, anything to add on?
So take note, this is an investment, and high yield definitely that is a risk. If you are someone that can't even take a swing of about 3 to 6% swing, then this may not be suitable for you.
Okay, so definitely this is considered a high return. Okay, consider high return. I mean, especially for bond side.
Yeah, okay. For bond side. So the risk is definitely, if there's a bond default, of course the price will drop. So if you can't take the type of risk, then maybe this will not be suitable. Then we want to look for all those low volatility investment grade short-term bond fund.
Yeah, and for those people who are watching this video, I would strongly suggest that you actually meet up with Darren or anybody in our team, so that you can actually get a review of your risk appetite, and how much money you are investing, how you should be diversifying all these what we call these different asset class, and what are your choice. Okay, because different people, they are having a different what we call financial resources and different risk appetite. So it's better you go through a financial review with our team, so you can actually have a better idea on what is actually best for you. So we can list out a few choices for you. Okay, so for this session, I think we will end here. Okay, thank you for watching this. Okay, and please give us a text, WhatsApp us if you have any questions, so that we can actually answer to your question or arrange an appointment to meet up with you. Okay, so thank you very much, everyone.
Okay, thank you, everyone.